And Woolworths' profit is out today, Ross. It looks strong, but its boss, Brad Banducci, says that shoppers are changing their habits in the face of those and ongoing rising rates.
Out goes the fillet steak, in comes the mince. It's always the thing that happens in these type of circumstances. So as interest rates rise, as energy prices rise, the place that people feel it really is when they're shopping. They know the prices, and this is where people will change their behaviour. You can have a look at this out of Woolworths' profits today. Now, don't look at that top-line profit, because what they've done is strip their drinks business, Endeavour, out of that. So that basically accounts for that apparent big fall in profit. The underlying profit of Woolworths is strong and going forward. You can see that in the revenue, up by 4%. Again, food price inflation is there. At the moment, though, they're saying really there's a clear sign that Australians are affording the higher prices. They've got the savings, they've got the jobs. Let's hear a little from Brad Banducci, the Chief Executive, today.
The characteristic last time was everything was going up. We are starting to see some things go down, which is terrific. They're not going down fast enough, but we are at least starting to see a more balanced message.
Ross, wages growth here was lower than expected. The New Zealand Reserve Bank, meantime, it's taking no chances, is it, in terms of inflation, another 0.5% rate rise?
You bet it's not taking any. And interestingly enough, it is New Zealand that many people look to when they wonder as to whether the Reserve Bank here has done enough. So that wages number came in for 2022, 3.3%. The market expected 3.5%. The markets here actually recovered, the stock market in particular. After that, it had been well down beforehand. But it's New Zealand where you look at its cash rate. So it's had successive interest rate rise. You can see them. They just haven't stopped. 0.5%, 0.5%, 0.5%, 0.75%, 0.5% now. They're determined to try and get on top of inflation. They say there are signs that maybe some demand is starting to ease out, but they say, look, it's not enough. There need to be even more interest rate rise from here. The one thing I would note is remember that Australia's cash rate now, 3.35%. There's New Zealand, 4.75%. And so here in Australia, the big question is whether the Reserve Bank has done enough. The markets today suggesting that maybe at least another 3 interest rate rises here will be necessary before the Reserve Bank eases, and that would take our cash rate over 4% as well.
Looks like it's where it's headed, Ross. Thank you as always.